Alright, I apologize folks for the delay, but let's go right ahead. Well, hello everybody, this is Sunil here again from Fibforex123. Been here after some time, and we'll be looking at some Fibonacci ratios today. Trading using Fibonacci ratios. Brief introduction to Fibonacci is looking at the different ratios and what we're doing. Well, first a brief introduction about myself. For those of you who are new over here, most of you are pretty familiar with it. This is my website, Fibforex123, where we offer lots of different services. We have services like live trading room, mentorships, etc. I have just opened up an office in London by the time, and we have a workshop coming up in London on December 5th and 6th in case people are interested. We'll be going over advanced harmonic patterns over there, but that's about it. Let's have a look at the charts here. Alright, let's start off with Fibonacci trading. Now, Fibonacci numbers, brief introduction, it is a series. Fibonacci numbers, Fibonacci ratios are based on a mathematical series, but somehow these particular numbers respect, or price tends to respect these numbers quite a bit. Now, there is a standard Fibonacci retracement which everybody uses. If you look at this one, generally what happens is whenever price makes a move, right, let's start off with the absolute basic stuff. The Fib retracements, which is what everybody uses. What you have is price making a move, and price gives you a pullback after that, which is a very, very natural thing. Price always tends to move in waves. If it makes a move, it will give you a pullback. The standard Fib retracements are plotted. You will plot your Fib retracements from the swing low to the swing high to determine levels of support where price is expected to find support. That's the basic use of the Fib retracements, and there are standard levels. You have the Fib 50, you have the 38.2, you have the Fib 61.8, which is a standard thing, right? And let's plot this one on. If I plot my Fibs from the swing low to the swing high, you can see that in this case price stopped exactly at the 61.8. Now the standard levels are 38, 50 and 61.8, which is what most of the traders use. But even in the retracement, which we will come back to later, the 78.6 becomes a very, very important level. So there are different Fibonacci ratios that we use. Besides the retracements, we use the projections. There are something called the fans. We use the Fib expansions. Then there are also the arcs, which I don't really use. I tend to use the fans and the expansions and the retracements projections. Now each and every situation demands a specific Fibonacci ratio. Like if we are looking at this particular move and a pullback, we are expecting price to find support, so you will be using a retracement. But let's start off with something which we call as the Fibonacci fans. Now this is something which most of the traders are not familiar with, and this is what I want to go over. Right now, before Fibonacci fans, hey Ed, good to see you here again, right? Let me just close this. Well, let's touch a little briefly. I've just put up the pop-up window so I can see the questions. In case there are any questions, I would request you to please ask the questions at the end of the session. Let's just go ahead with this. A trading plan. Now, I have coached enough of traders, and I have come across a lot of traders, been there, done that, and I know precisely the reasons why a new trader loses money. And it's a simple fact. It's not difficult making money in this field so long as you follow the correct principles. Now, even the Fibonacci's, they're part of technical analysis. I consider price or a trading plan or a trader that he should go over something, what I define as the 3 M's, which is the money, mind, and method. Now, if you distribute the money, mind, and method on a scale of 1:10, right, I call them the 3 M's. So you have first is your mind, which constitutes, first is a money management, which we will talk as money management. It will constitute about 5 parts out of 10 in a trading plan. Then comes your mind factor, which is your mind factor. I'm just trying to make something here, excuse the handwriting, which will constitute about 3 parts in a trading plan. The last one is the method, which is your technical analysis. You can call it your TA, which constitutes about 2 parts in a trading plan. So what you are really looking at is technical analysis is the least important part of a trading plan. If you concentrate on your money management and your mind factor, which most of the traders tend to ignore, this is one place which will help you in your trading. Simple fact remains that most of the traders I have seen that they tend to concentrate on methods, that's a technical analysis, and within that they look at indicators. Most indicators are lagging, most of them. In fact, all of them are lagging, but there is a way to use the indicators, and which is not surprising that traders lose money. So what you have to do is you decide first on a trade plan is you have to decide on a technical system. You could trade on any system. You could trade on the Fibonacci we are talking about. You could trade on advanced fibs, which is the harmonics. You could trade on a divergence. You could trade with a simple moving average crossover. You could trade on a MACD crossover line. Once you have defined that, you have to apply your money management and you have to apply your mind factor. Now, mind factor is simply the discipline and patience of a trader and the expectations of a trader. This is something which we keep going over again and again. Any trading system that I have, that I teach, we implement the policies of money management and mind factor so that you have a trading system as a whole. Right, let's have a look at the Fibonacci based on these concepts. I would be the last person to tell you, okay, this is what it is, now you go ahead and trade it. Until and unless I cannot explain the money management on a technique, any technique, or the mind factors, the effect of the mind factors, it's quite useless. I would be wasting your time and mine. Then this is done. I could just probably give you a book and say, okay, you go read a book and go and trade. That's not the way to do it. Right. Now let's understand price action. Let's start from the beginning. There is a concept which is called the 1, 2, 3 pattern. So I will define this as a 1, 2, 3 pattern. This becomes a bearish 1, 2, 3 pattern, where you have a swing high. After an up move, price gives you a retracement, gives you a pullback. Now this pullback, the point 3, if it does not take out the previous high, it is expected that your underlying momentum is still bearish. Obviously, if this pullback makes a new high, that means your previous uptrend continues, right? What is an uptrend? If you look at this uptrend from here to here, I'm just talking about this wave. Your highs are going higher. Your lows are going higher. This is what constitutes an uptrend. You have a retracement. At this stage, you do not know whether price is going to change trend or not. It could just be a pullback. If price makes a fresh high, that means it's a continuation of the uptrend. If it does not break the previous high, it turns into a bearish 1, 2, 3 formation. This is the simplest and one of the most effective trading patterns, chart patterns. It's well worth to understand the 1, 2, 3 patterns. Let's use the Fibonacci on it. Now what this 1, 2, 3 tells us that when price 3 is formed here, you are looking at a bearish move. Expected momentum is bearish, but we are still not sure. You need some confirmations. This is the place where we use the fib fans. Right? What we will do is we will plot the fib fans from this swing high to this swing low before price retraced up. We will plot the fib fans here, and let's do that. So fib fans to be plotted on 1, 2, 3 formations. In the fib fans, we follow certain levels, which is the 38, the 50, 61.8, 76.4, and you have the 88.6. Of these, the 88.6 level is the most important. I call this as the barrier. If price remains within the 88.6 level anywhere, it could even stop at any fib level. That means your momentums are bearish. If price gives you a close above 88.6, that means it's expected to move up. So this becomes the filter for determining a change of trend. If a 1, 2, 3 formation forms within the fib fans, it is a valid 1, 2, 3 formation. Now, if you look at a 1, 2, 3 formation, let's briefly look at price action. Right? Anytime in a move, in a trend, price will always give you pullbacks. Let's just consider this particular move up. Can we not identify this as a swing low, a swing high, and the retracement here could be this one? So within a trend, it also forms a 1, 2, 3 formation. Anytime price gives you a pullback, it is a 1, 2, 3 formation. Is this going to be a valid 1, 2, 3 formation? At this stage, let's put it this way. I don't know at this stage where the price is going to continue towards the downside. So what do? We plot fans. Same concept, we plot fans, swing low to swing high. Price remains within fan levels. If it remains within fan levels and starts moving up, your momentum is bullish. So any 1, 2, 3 formation, a 1, 2, 3 formation can form within a trend, or it can form at the change of a trend. You see, at the change of a trend, this becomes your 1, 2, 3 formation. Anytime you come across a 1, 2, 3 formation, the most valid 1, 2, 3 formation is by using Fib fans. That is the only and the most effective way of using Fib fans. Of course, if you use fans on a longer term time frame, it determines levels of support and resistance. As a case in example, on larger term time frames, let's say on a weekly time frame, right? Or let's take it strong on a monthly time frame, because the Canadian dollar on the monthly time frame has been giving us something. If I plot my fans from swing low to swing high, can we see that price is within your fan levels? So what conclusion can we draw here? We can say that the underlying momentum is still bullish. Let's put it this way, I wouldn't say it's still bullish. The underlying momentum is not yet bearish. It's just as simple as that, right? So if your underlying momentum is not bearish, I would probably start looking for moves towards the upside. I would definitely not look for shorts. In a sense, this is a conclusion, and if price starts rallying from here, it will usually form some levels of resistance support within fan levels. Right? There's another effective way of looking at it, but let's concentrate on this now. What we have designated here is your 1, 2, and 3. A bearish 1, 2, 3 pattern confirmed by Fib fans. There we go. Bearish 1, 2, 3 patterns confirmed by a Fib fan. Alright, now that you have a 1, 2, 3 pattern, we need to define, as I rightly said. Okay, Alex, we'll have some questions. Ed, we'll come back to that. Alright, DTP, what time frame? Could you define USD CHF time frame? Every time frame gives you a different factor. Alex has a very valid question. How do you determine where do you plot the swing lows and where do you identify a swing lows and swing highs from? Keep one thumb of rule. Identify a swing low and a swing high from a place where price pivots from. Let's have a look at a larger term time frame. Right, in this case, what I would identify as my swing high and swing low is, this would be the swing high, this would probably be the swing low. Why? Because in this moves in between, these are the places where price pivoted from, it changed trend from so far. These moves in between are just waves in between. Has price changed trend over here? No. Every time frame will give you a different one. What we looked at was this one on the 4-hour. On the 4-hour, what I could identify on my charts, what I could see was this wave. This was the swing point on the 4-hour. On the daily, this becomes a swing point. So Alex used that. Look at what we call as pivot points. Places where price pivots from. Right, let's get down to this. So once we have a confirmation, prices within fan levels, what do? We want to take shots. How do you determine where your entry is, where your stop is, and where is your target? Like I said, until and unless you do not have a fixed plan for it, it doesn't make sense to go ahead and say, I'll just tell you, okay, this is a 1, 2, 3, go trade it. You cannot do that. I have to give you the parameters for the trade. Right? We are looking for shots. For that, we use Fib expansions. Now, expansions are different than retracements. They differ. On a Fib expansion, you require 3 points. We plot the Fib expansions on the points 1 and 2. And we look at the point 3. Now, in the MetaTrader, you have the Fib expansion coming up here. This is where you drag the third point to the high and the low of your point 3. This becomes your Fib expansion. Your ultimate targets for a Fib expansion, your first and immediate target for a Fib expansion or for a bearish move is always the Fib 100. This is the minimum place that price will go to. Then it extends beyond to 127 and 161. In this case, if you look at this, price stopped precisely at the 161. There's a reason why I chose this example, because this was traded exactly at the 161. Now tell me that the price does not respect fibs. It's a very uncanny thing, but price does tend to respect fibs quite a lot. Right, so what are you looking at? You're looking at, ultimately, this is your target. Your stops always to be placed above the 0.3. If you place your fib expansion, your FE is 0. So stops to be placed above here. What about your entry? For your entry, you take a combination of 2-3 factors. We will plot trend lines. Now this is your 1, 2, 3 pattern. From your move 2 to 3, we will plot trend lines. And we will confluence that with a fib 50. You can even enter on the fib 23.6, but a fib 50 is usually considered to be a safe place. Right, so what do we have? Let's take it this way. We have an entrance at fib 50, entry. We have stops to be placed here. Ultimate targets 161. What is my risk to reward ratio? I have defined my entry, my exit, my stop. I have confirmed my 1, 2, 3 pattern based on fans. I know exactly where price is going to go. It may not go. I look at money management. This is my risk. This is my reward. It's almost 1:3. If my risk to reward ratio is good and my fibs confirm, I will take the trade. Right? Now this becomes a trade plan, a complete trade plan on its own. Now this is what I mean. Until and unless you do not define your entry, your exits, your stops, trade management is also a very important part. I will not go into it right now. You take profits in between in some particular technical levels. How you manage your trade. What do you do if price goes against you? In fact, we have an effective filter which tells us whether this 1, 2, 3 is going to work. Is it really good? What if price turns against you? You can get out of the trade before price reaches your stop levels by using the effective filters that we have. So you get out with a minimum risk. Remember, losses are a part of trading. You will get losing trades, but your account is going to grow if your losses are small and your profits are large. So you need something which will tell you whether this is really going to work or not. We are looking at high probability of a trade. It will never work 100% of the time. But if I can have, or if I have some factor which tells me that, okay, this is not going to work, I can get out of the trade earlier before price reaches my stop level. Thus, I reduce my risks, which is the ultimate thing that a trader must do. Reduce your risk, let your profits run. That is the only way to grow your account. Right now, when we conduct our workshops, now this is my 4th workshop in London, we have got an excellent response even earlier. We go over each and every trading system. I'm just showing you the fibs with the 1, 2, 3s in detail, but we have countless other systems which are based on fibs, which are just as effective, and a trade plan specifically defined for each and every system. Right, let's take the examples of the fib fans before we go over to some other fib levels. Right, okay, USD CHF daily and weekly. Let's see if we can make some sense out of it. Let's implement our knowledge on live charts to see what we are getting. Right, all right, daily and weekly. Weekly, let's take into account this particular wave. We are more interested where the price is going to move up, where the price is going to go down. So let's take into account this particular wave on the weekly, which is the same thing on the daily. This wave has been finished. We are not really interested in this right now. Let's follow it up on the daily. Right? From here, I would plot my fib fans. If I plot my fib fans over here, this is not the place to use the fans. Remember, when do we use the fans? When price has made a strong retracement, and we need to know whether this retracement is stopped or not. So DT, this is not the place to use the fans. In this case, I would rather use the fib retracements to determine expected levels of resistance. As of now, price is stopped exactly at 23.6. Now price tends to respect these levels. Let's take it on the weekly. If I wanted to plot my fans, earlier I'm just giving you an example, I would have probably plotted my fans, let's say from this swing high to this swing low. If I would have plotted my fans here, swing points. We saw that price remained within. Now this was a classical example. Price did not break the 88.6, so we were expecting bearish moves. If it would have broken above this, we would have expected bullish moves. So this at this point, this would have told you that, okay, let's look for bearish moves. Similarly, let's plot the fans here. Well, this one did not turn out. As I said, nothing really works out 100% of the time. In this case, I would have expected price to continue towards the downside, which it did not. Right? Nothing really works 100%, and I'd be the first one to admit that nothing works 100% of the time. This probably, if you would have taken fans from here, you would have got into a losing trade, which is part and parcel. I would have expected price to move down. Right? Let's take the example on the euro. What Ed has been asking on Ed, we've been asking on 1 hour and the 4 hour. Let's take it on the 4 hour on the euro. Similarly, once more on the 4 hour, not a place to plot the fans. I need price to retrace up to a certain level, at least to half of the move, and I need to determine whether it's going to go up further or not. That's a place where I would plot my fans. So again, in this case, I would probably use my fib retracements. Now the thumb rule, let's go over, since we are on this topic, let's go over fib retracements. Right? In this case, if we use fib retracements, the thumb rule, first and foremost, you have to plot your Fibonacci's on swing points. I cannot plot my fibs from this swing high to the swing low. I cannot plot my fibs from this high. I have to plot it on pivot points, places where prices change trend. This gives me the best picture. The thumb rule says that if price has broken one fib level, that's the reason why I have all the fib levels, it has got a high probability to move up to the next fib level. So just looking at fib retracements over here, simply looking at fib retracements, we can say that price can still be expected to move up to this level. So if I was trading intraday, I would tend to remain long on the euro, at least till this level. If price finds a resistance precisely here, does not give you a close of a bar, then I would probably start looking for some moves to the downside, if at all. Right, so the thumb rule of the fib retracements, which works for all fibs. Let's take it on the 1 hour. Can we identify a wave on the 1 hour? I really can't identify. See, on the 1 hour, if I plot my fib retracements, what I can see on my charts right now, this is a valid swing point. I would probably plot my fib retracements here. But if I go on the 4 hour, it's an in-between wave. So always go one time frame higher, right? Always go one time frame higher to determine a valid swing point. So anyway, coming down to the fib retracements, this is what it is. At this stage, we can see that price had stopped exactly at your fib 50. If it had stopped exactly at your fib 50, it's probably telling you that we are looking at a retracement. But is this a valid one? It's not. This fib is more valid. Alright? Alright, this is as far as your fib retracements are concerned. Now these are the 2 or 3 examples. This, if you want me to look at will it break 1.3700, you'll have to pay me for that. And I take my payment in kind, not in cash. About a crate of a beer. Okay? No recommendations here. If you give me some beer, I'm going to tell you whether it's going to break 1.3700 or not. Otherwise, I'm not going to. Alright, just kidding around, folks. We'll have a look later if we have the time. Let's concentrate on the fibs right now. A retracement, at least, that's right, Ed. You should look for a retracement of at least 50% before you use the fan levels. That's the general thumb rules. Right. Now let's have a look at some things what we call as Elliott waves. Now Elliott waves are very, very basic structures of price. For those of you who are not familiar, Elliott waves are also pretty complicated by nature, but then one has to understand an Elliott wave for the simple reason that price always moves in a 5-wave and a 3-wave structure. Right, let's first concentrate on a smaller one. Let me concentrate on this particular wave, only on this wave. Now within waves, you will always have price since price is fractal in nature. Let's just have a look at this one. Right, let me take it on the 4 hour. Do I have that? No. Let's take it on the daily. Let me zoom it inside. Concentrate. In a sense, an Elliott wave is a 5-wave pattern. Wave 1, 2, 3, 4, 5, which is followed by a 3-wave correction, A, B, and C. Now, anytime you look at price always moves in a 5-wave and a 3-wave pattern. The challenge with Elliott waves is they're pretty subjective in nature. And you really don't know where to start your wave count. Every wave count can be different, but it's well worth understanding what an Elliott wave is and understanding the ratios. Now, I tend to keep it very, very simple. Very, very simple. Just so long as price respects certain fib ratios, I would consider it to be an Elliott wave. If I consider it to be an Elliott wave, I know what part of the wave I am in, and I can trade that. Let's take this example. Let's say if I was trading this. Initially, we had price making one impulsive wave, which is followed by one corrective wave. So we would define this as your Elliott wave 1. So this is your wave 1. This is your Elliott wave 2, corrective wave 2. Right, there are certain rules for it. So an Elliott wave comprises of impulsive wave 1, impulsive wave 3, impulsive wave 5, corrective wave 2, corrective wave 4. 3 impulsive waves, 2 corrective waves. So long as this remain within the fib factors, we consider them to be Elliott waves. If not, they are not Elliott waves. Let's briefly go over these rules, very briefly. There are certain rules for Elliott waves which we will define, and we will classify the waves based on that. Your wave 2, your corrective wave 2, is usually a sharp correction which usually goes down to about 50 to 61, approximately 61%. And your wave 2 is always a 3-wave correction. You remember this 3-wave pattern? Your wave 2 is a 3-wave pattern, so we are looking at a 3-wave correction. In this case, it stopped at 50. I would prefer a wave 2 to go up to 78.6. Wave 2 is a usually sharp correction. But then this is the subjectiveness of the Elliott wave. We can still classify this as an Elliott wave. So I say that this is a Elliott wave 2. If this is a corrective wave, we are expecting an impulsive wave 3. Right? Knowing this, we can start looking for a wave 3. Your wave 3 is usually the longest and the strongest wave of all the Elliott waves. So we are going to look into it. Your Elliott wave 3 has got a minimum condition. It should be a fib projection. Now we are going to be looking at fib projections. It has to be a fib projection of 200 to 261. Ideally 261. If you look at this, excuse the noise in the background. I'm sorry about that. 261. Price stopped exactly at 261. A wave 3 usually travels to 261. In strong waves, I have seen it to go up to 423. But a minimum of fib 200 is required. Anytime it crosses fib 200, it's supposed to be classified as an Elliott wave 3. So then, once Elliott wave 3 finishes, we are looking for a corrective wave 4. Now your wave 4 is usually a very complicated wave. There is no fixed rule for it. There is only one rule for your wave 4. A wave 4 will never go into the territory of wave 1. A wave 4 will never enter the territory of wave 1. If it does, your Elliott wave gets negated, period. Elliott wave, a wave 4 can stop at a minimum level also. So what we do is we had price finding support somewhere close to the 38.2, which is acceptable. So once price starts moving up, then we are looking for a wave 5. Now the point I'm trying to make over here is that if you say that this your wave 4 is complete, I can trade my wave 5. That is more important. So I trade my wave 5. Your wave 5 is also a fib projection, usually 127 to 161. In this case, it went up to fib 200. Right? Again, the subjectiveness, but it goes up to fib levels. Now price does tend to respect these levels. Once my wave 5 is finished, I know there's going to be a corrective wave. I can trade a 3-wave pattern here. Can I not? Because I know it's a ABC correction. An ABC correction usually comes to approximately 50% of the entire Elliott wave and roughly in line to the previous wave 4. This was a previous wave 4, roughly in line with the previous wave 4, close to it, may not be exact. Now you have waves within waves. I'm going to be classifying a complete wave. If I look at it at a larger term picture, this 5-wave pattern with a 3-wave correction can be classified as one retracement. So I can classify this as a wave 1 on a larger term time frame as a wave 2. Let's see where this wave 2 stops. This one stopped again at 50%. As I said, once more, I would prefer a 61 to 78. 50% is also acceptable. And it is a 3-wave pattern. So we are looking at, I'm sorry, one moment, a 3-wave pattern. So this is classified. Now, looking at the longer term picture on the euro on the daily, we could have anticipated this to be a wave 3 and we could have traded this. What is your minimum condition of a wave 3? It should be a minimum fib projection of 200. In this case, it went beyond 200. So I can say right now that we are looking at a corrective wave 4. Right? If I define my fibs, what is the condition for your corrective wave 4? It should never go into the territory of wave 1. What I can say that there could be a 3-wave correction here, possible, if it finds support somewhere here, or wave 4 can even complete here, start moving up. I can look for a wave 5. Now I may not trade this Elliott wave per se on the euro, because right now I don't know whether wave 4 is complete, but I would definitely look for some longs. Usually the corrective waves are 3-wave patterns. I would expect it to move down here. So this is a recommendation. Okay, who owes me beer now? Who was asking? Bliss. There you go, recommendations. So how much of beer are you going to give me for that? Right? Well, just kidding around, folks. But what's more important is that we know what part of the wave we are in. When price made a high here, which completed a fib level, which completed with a divergence, price made a higher high, and this made a high and a lower high. I knew that a wave 3 is complete. We started looking for shorts. I don't know right now if my wave 4 is complete, but the way it's going, I would expect moves down here. If it finds support at 33.10, 33.16, I'm expecting a wave 5 to go up. So intraday, if I'm trading, I try to remain in the direction of the wave. That is more important than anything else. All right. Okay. Now let's have a look at something which we also call as a divergence. We had a look at fib fans, the 1, 2, 3 patterns, fib expansions, targets for the 1, 2, 3 patterns. We had a look at Elliott waves. There's something called the harmonics, of course, but I will not cover the harmonics today. It's a very vast topic by itself. It depends on precise fib levels. Absolutely precise fib levels. Right, let me see, do I have a harmonic somewhere? I had a harmonic we were following. There you go. On the AUD CAD. Now this is a harmonic, but more important than anything else, look at your fib levels. If I plot my fibs, we had price finding resistance exactly at a 61.8. Anytime price finds resistance or support at a precise fib level, for me it's the beginning of a harmonic. We can also define this as a bearish 1, 2, 3. Don't you think so? Right, let's go over this situation. What are the alternatives present to us as a traders? What we are looking at. This could be a 1, a 2, and a 3. Now the price has started moving down. What is the confirmation for the 1, 2, 3 pattern? Price has to remain within fans. Price is definitely within fans. So this is a valid 1, 2, 3. If this is a valid 1, 2, 3, what are the targets? We are going to be looking at fib expansions. Right? I'm looking at a minimum target of Fib 100. It could even go beyond, but Fib 100 is a minimum target. So I have one target for the AUD CAD. We can enter on the break of this trend line. We are looking for shorts on the break of this trend line. That's a different matter. That's one. The second point is your harmonic. I have, based on the harmonics, this is another target. So my first target on the AUD CAD is we are looking for shorts for the simple reason price has broken a major trend line. First target coming down to this level, which is a fib level incidentally based on the concepts of the harmonics. I'm looking for 78.6. If it breaks 78.6, it will turn into a bearish 1, 2, 3. It could go down to this level. Now, once again, folks, what is most important over here? It may not. For all you know, we are looking at a very strong reversal bar forming right now. Don't you think this is a nice doji forming, a bullish doji forming here? Long tail and a hammer. For all we know, price may keep going up, which will negate our 1, 2, 3, which will negate everything. So we have some filters which will tell us that, okay, momentum not looking good, it can go up. But what is more important that if this trade works, your targets are fixed. You know where price is going to go. If it breaks this, it's going to go further. If it finds support, this is where it's going to go. This is most important because if you have your trading parameters in front of you, you can manage your trades. If you do not have your trading parameters in front of you, you can't manage your trade. And believe me, the trade management, the money management, the mind factor is more important than the technical analysis. Unfortunately, most of the trading systems that we have, we start off from the charts. So everybody tends to concentrate more on the charts and specifically more on indicators. But if you concentrate on price action and if you implement money management and mind factor onto it, I'm very serious. I have seen the turnaround in traders. There is no reason why you cannot succeed in this line. I have seen the turnaround. I have taken personal mentorships for people, turned around their trading, made specific trading plans for them, and it's not difficult. All right. Oops. Stalker, this we'll keep it for the next time when we have a grab different methods that we follow on the euro interest situations. Today we are not looking at that. But interesting situations. Stalker, why don't you do one thing? Why don't you send me a mail with your thing? I'll reply to it. This is an open forum and I would rather concentrate on the fibs that we are looking at today. Right? And just to remind you that next Tuesday I have another session before I leave for London for my workshop. We have a premium session there in which we will be looking at the divergence and I'll be going over specifically rules of the divergence. How does one trade divergence? How does one identify the divergence? What are the trading parameters? What are the trading managements for it? Well, there you go, Milkov. This is my website. Right? Oh, John, is that right? Yes, sure, John. Here, this is the mail that I normally check. Well, I think that brings us to the end of it. There you go. So we can stop the recording. If you have any questions, of course, we'll quickly take some questions. Otherwise, I will see you next week. Anytime, anybody, feel free to send me a mail. You want to discuss any harmonic patterns, any 1, 2, 3s, any fibs. I have always replied to your mails. Yes, Carlos, it is right on. Let me just. Did I close it? It's right on the website banner. Right. Let me just show it to you before we close. There you go. Right on the website banner. Workshop in London. If you click it, there it leads to the workshop details. This is the workshop details. What are we going to cover in the workshop? The first day, the second day, where we are holding the workshop, registration links, etc., etc. We've got trade examples of what we trade every day in my live trading room. I have a live trading room where we trade every day based on this. If you come to the workshop, you get 1 month of free live trading room along with the workshop. So you can, whatever you've learned, you can implement it in real time with us each and every day. All right. All right, folks, it's great being here again. Thank you very much. And I will see you next week for the Divergence Premium webinar. Once again, if you have any questions, feel free to get back at any time. I'm always available. ICO, it is one of the most effective and simple trading strategies. For me, it's always things are straight. Keep things very, very straight and simple, and implement the factors of the 3 M's. If you do that, believe me, and I'm talking from experience, you can succeed in this market. Of course, you lose money. In the sense you have losing trades. I'm sorry, you shouldn't lose money. You have losing trades. It's your money management which keeps you ahead. All right? This is what we follow each and every day. Yes, this is being recorded. All right, folks. If there are any questions, please let me know about it. Thank you very much.